Alright, hey guys, for my project this semester, I have been looking at the company Zillow Group, which is in the real estate sector. The real estate sector is a really interesting area to be looking into right now because they're actually doing pretty well. They're coming back from the recession and they have been growing positively and are expected to grow positively. Zillow Group is a new area in this real estate sector. They are providing a service to the people of the United States by having lots of home listings and lots of rental listings on their website from many different states, many different realtors available to the people to easily access online. So that's great that they are a new area in this sector and they are doing really well in this area. They are at the top of the leaderboard here, and they actually own many of their competitors below them. So that's another great thing about this company. However, when we look deeper into this company, we see some bigger issues. Some of those issues being in their finances. In the income statement, balance sheet, and the free cash flow statement, the numbers aren't very consistent. There's lots of drops, there's lots of growth, but then there's also many, many negative numbers. Those negative numbers that are the most noteworthy are that their net income is completely negative. In 2016, their net income was negative $220 million, and currently, in the term we're in now, their net income is negative $43 million. So they have came up a little bit from that big drop, but they are still in the negatives. Another big issue is that in their cash flow, their free cash flow is also very negative and very fluctuating. So their free cash flow dipped really far down into the negatives of negative $63 million in 2016 and has regained some strength, but is still wavering. So those are some really big issues in their financials. As we continue, we're going to find out that there's some more issues in other areas that show us how their financials are not very healthy. Some of those being that their return on equity, return on assets, and again, their free cash flow when calculated are all negative and very small numbers. In their return on equity area in 2016, they were at a negative 0.086. So that's very small and very negative. Again, their return on assets was negative 0.069 in 2016, and right now their free cash flow is sitting at negative $477 million. Those negatives show us that they do not have enough cash to be able to pay off some of their obligations. Those are huge red flags that lead us to predicting their future progressions. Sorry, I'm looking at my paper real quick. Checking my numbers. Anyways, some more areas that show us how healthy this company is their current and quick ratios. Both those ratios have been very small, which leads us to see that they are not able to pay off their short-term and long-term obligations very well. That relates back to the free cash flow. They have negative free cash flow, so it would make sense that their current and quick ratios are very small. Those are big red flags again. They should be able to pay off those short-term and long-term obligations. Some other areas of interest for their financials leading to tell us that they are not very financially healthy is in their price to book, price to sales, and price to cash flow. These numbers are all pretty small for price to book and price to sales, but in price to cash flow, they have very high numbers compared to the industry average. In 2015, they're 0.7. Then coming in 2016, we see a major drop in their price to free cash flow, which is negative $140.08. Again, the industry average is 11.7. So we went from a high number to an extremely, extremely low number in that area. And then currently, they are having a price to cash flow of 48.9 compared to the 11.7. So what that tells us is that they do not have the high enough cash flow compared to the rest of the people in the industry. Again, another red flag to point out that free cash flow is a problem. So for my valuations of this company, I'm going to start off with the forecast, and then we'll go into the intrinsic valuation. So I forecasted the growth of this company at 5%. It does seem a little bit generous, but seeing how we've had many natural disasters currently, there's going to be a need for the service of Zillow Group because people now need to purchase homes, or more homes need to be on the market so those people that were affected by the disasters can come back from that. Also, they're still growing as a sector. The industry is growing, so I gave them that, and I said that their growth would even out at about 5.3%. Now, this percentage does seem pretty high, but when you calculate it into some different financial aspects, we see a big issue in cash flow again. Even with that 5.3% growth, their cash flow is getting deeper and deeper into negatives. In my prediction of 2020, their free cash flow with that growth is going to be negative $76.2816 billion. Million dollars, not $billion, sorry. So their free cash flow is dipping farther into negatives, and it is completely consistent through each year that I have predicted. From 2017 to 2020 is completely negative in their free cash flow. Other areas have grown with that growth, but the big issue is that free cash flow. Intrinsically, my valuation for this company is that their stock is very overvalued from my point of view. Right now they're selling for $42.73, or $42.73, sorry. And so, though it is still a small number, because they just recently became public with their stock, I think it's still valued really high. The reason I think it's valued really high is that their health financially is not there. Yes, they are the leader in the industry, but financially they cannot support themselves to stay that leader. So all in all, I think that it's very overvalued right now. When I calculated it, I don't believe I calculated it right, so I don't think my number is correct. So we're just going to forget about that. But just know that I believe that right now at $42 it is very overvalued. So if someone already has this stock, and if they bought it right at the beginning stock price was $8 for them, it would be a great time to sell this stock. They're at $42. Maybe wait and see if they will grow any more because of the need for homes right now because of natural disasters happening. So they may grow a tiny bit more with that, but barely any because their financials are holding them back. So definitely sell soon, and they should be able to get a good return on that. If someone was looking at this stock, I definitely would not suggest them to buy it because their financials are so risky, and the forecast tells us that most likely that free cash flow is going to hit them harder and harder each time. So I would not buy it right now. I would wait to see what happens, see if that free cash flow continues to be negative, and if it does, do not worry about this stock at all. Though it is a great service, it is not a great company financially, so that is a big issue. So that's what I think about Zillow's stock. It is a great company, but unfortunately their financials do not show it. So they really need to work on those financials, working on paying back their obligations, and work on their free cash flow. And if they're able to do that, then maybe in the future we can come back to this stock and check it out again. But for right now, sell or don't even buy at all. Thank you.